Welcome to my channel. Here, I break down finance, investing, and money management in a clear, simple, and practical way. My goal is to build a community that focuses not on short-term excitement, but on long-term financial freedom. If you're ready, let's dive into today's topic together. Today, I want to tell you a story about investing. Not a story of making money fast, but the story of how managing money can truly transform a life. This is not about get-rich-quick schemes or overnight success. It is about time, patience, and wisdom. Investing is a journey. Everyone begins full of motivation, but very few reach the destination, because investing isn't just a matter of mathematics, it is a matter of character. Before learning how to invest, I had to understand one thing. Money is an emotional game. Most financial decisions are driven not by logic, but by fear, greed, anxiety, or the fear of missing out. The most dangerous moments in the market appear at two extremes: extreme optimism and extreme panic. Most people don't lose money because they're bad investors. They lose because their emotions defeat them. That's why the foundation of my strategy begins here. I train myself not to listen to the noise, but to follow my own system. Before becoming an investor, you must become a master of balance. The first step of my investment strategy is simple: an emergency fund, 3 to 6 months of expenses. This is my safety wall. Without it, every investment becomes a necessity. Necessity leads to panic. Panic leads to mistakes. Once this fund was in place, I finally earned the right to invest, not out of fear, but out of confidence. Every investor has a defining moment, the moment they realize investing isn't about how much money you put in, but how long you stay invested. My moment came when I first understood compound interest. Compound interest says your money earns money, then that money earns money, and that money earns money. It's a financial snowball, small at first, but when time is on your side, it becomes unstoppable. That's when I learned investing is the art of buying time. I stopped caring about short-term results. Instead, I asked myself, who will I be in 5 years? What will my portfolio become in 10 years? Time became my greatest asset. The guardian technique of my investments is dollar cost averaging. This strategy allows me to invest the same amount every month. If the market drops, I buy cheaper. If the market rises, my holdings grow. Dollar cost averaging gives me 3 superpowers: emotional discipline, protection from timing mistakes, turning volatility into opportunity. Thanks to regular investing, my portfolio no longer depends on luck, it depends on discipline. Once I realized this, the market stopped controlling me. I began controlling my investment journey. A portfolio is like a building. If the foundation is weak, the first storm will destroy it. My portfolio has 3 layers. The core represents stability, low fee, diversified index funds, and ETFs. S&P 500, MSCI World, Nasdaq 100. These indexes form my backbone. The growth layer requires research and discipline. When selecting stocks, I examine profitability, free cash flow, debt ratios, competitive advantages, and industry trends. I ask myself, will this company still be strong 10 years from now? If the answer isn't clear, it doesn't enter my portfolio. The defensive layer stabilizes everything: bonds, gold, and low volatility assets. It is the braking system of the portfolio, protecting against market shocks. No investment strategy is complete without risk management. Risk management is not about attacking, it's about avoiding being in the wrong place at the wrong time. My risk principles: diversification, never put all your eggs in one basket. Position sizing, never allocate more than 10% of your portfolio to one asset. Strategic stop loss, rule-based selling, not emotional selling. Emergency fund, the psychological shield that prevents panic selling. A bad investment rarely destroys a person. A bad reaction usually does. Every crisis reveals 2 types of investors: those who panic and those who prepare. Crashes are not my enemy, they are my opportunity. When fear spreads, most people run away from the markets. But I increase my positions in core assets because I know The most profitable moments often come during the darkest times. Markets are irrational in the short term, but they always return to fundamentals. For a long-term investor, crashes are simply discount seasons. My investment strategy is not about becoming rich. It's about gaining control over my life. The goal is simple: to reach a point where my portfolio pays for my living expenses. This is the essence of FIRE, financial independence, retire early. My personal formula: 30x monthly expenses, financial independence. It's not just a number, it's a vision, a roadmap, a promise to my future self. My philosophy is simple: keep it simple, stay consistent, stay disciplined. This investment strategy didn't form overnight. It was shaped by mistakes, lessons, books, crashes, losses, and victories, and it continues to evolve. Investing is not a destination, it is a lifelong journey. The greatest thing you gain from this journey isn't money, it is self-trust. Markets will rise and fall, economies will shift, the world will change. But a disciplined investor will always survive and eventually thrive, because their wealth doesn't only sit in their portfolio, it sits in their character. This is my investment strategy, and I hope one day you will build your own. Remember, a good investment doesn't just make you richer, it makes you free. Don't forget to subscribe to the channel and like the video. That's it for today. I hope what I shared added value to your journey. I'll see you in the next video. Take care until then.